Welcome, everyone. My name is Robert Ian of ConquerChange.com, and I'm joined here tonight with Carrie Lutz of the Financial Survival Network and David Morgan, our special guest of SilverInvestor.com. And we're here for the third installment of the Liberty Mastermind webinar. And David, Carrie and I are very pleased to have you join us tonight. Thanks so much for being here and agreeing to participate in this webinar. Great to have you here.
Yeah, thanks, David.
Well, thank you. I appreciated being invited to both the Liberty Masterminds. Felt it was very good, very worthwhile to have the availability to present there, and more importantly than my presentation was be able to learn and listen at those meetings. So thank you.
Oh, you betcha. And it was actually back in February of this year. Those of you that have watched this webinar series know that Carrie and I decided to put an event together here. We did one in Dallas a year ago, actually 2 years ago now. We did one here in Las Vegas in February of 2014. Brought together 15 speakers, top-notch speakers in the alternative media. David was one of them. He actually helped to headline both of the events for us, and just did a phenomenal job at both events. And he was our opening keynote speaker at the first event that we did in Dallas, and also did a presentation there to help conclude that event, and then spoke here in Las Vegas as well, and put custom presentations together for both of the Liberty Masterminds that we did, and you spent a lot of time putting those speeches together, David. I mean, and it really showed. I mean, the one that you put together for the mastermind that we did in February in Las Vegas here, would you share the title of that with everyone? It was on Starting a Revolution.
Well, first of all, let me remind you that I needed to give credit to the originator, and that was, and I don't know his name, it's a young guy, very intellectual, very grounded as well, from Storm Cloud's Gathering, and he's the one really that came up. I did alter it somewhat and put in my own flavor to it, but the basis of it really was his, and I forget what it was, the exact title, I'm sorry, but it had to do with how to do a productive counter-revolution. In other words, how to be peaceful, you know, sort of my word in the Gandhi methodology, where you know the idea has come, how do you transmit that idea effectively to everyone? And I was very, very pleased that, you know, that it resonated so well, because it certainly resonated with me. So what I did was use his foundational work, again, as the basis of mine, and went on from there. So, you know, I didn't want to, you know, take it and say, oh, it's all mine. It wasn't. Certainly he spurred that. And really, in a way, when I contemplated rather deeply whether I should use it or not, I reached the conclusion that I couldn't do any better. In fact, it was better probably than I could do starting from scratch. So I want to attribute him in case, you know, it gets back to him or not. I mean, even if he never hears about it, it's the right thing to do. So certainly, again, it really inspired me from the aspect that it's great from a personal perspective that someone at his age level is such a deep thinker and sees things so clearly. So I'll just leave it at that. But thank you. You're thanking both of us, really. You're thanking me, and you're thanking him as well because of the thought and effort that went into that. And if no one's familiar with Storm Cloud's Gathering, it's a website and also a video channel on YouTube. And actually, I believe I learned about it from Catherine Austin Fitz. So it's very interesting how a lot of us, quote-unquote, alternative media types sort of cross-pollinate and know each other and, you know, tangentially meet each other, et cetera. So probably overdid that. But, again, I don't want to just, you know, puff up my chest and say, yeah, it was great, thanks, when really the foundational work was not mine. On that. The one before was all me. But anyway, coming back on point. Thank you again.
Yeah, no worries. But so yeah, I mean, your presentation just really, it was very strong, and we videotaped the Liberty Mastermind, and we've had those videos available. But anyone that's gone to the Liberty Mastermind site has seen that it's up for maintenance right now. We're actually going to be loading your video onto our site. Just for free for everyone. We want everyone to see it. It was so strong and so powerful. That we're just going to be posting that there this week of New Year's for everybody to take a look at. So in about 48 hours following the webinar here, please, everybody, check out libertymastermind.us, and you'll be able to see the presentation that David delivered at the last Liberty Mastermind Symposium. Anyhow, that's a little background there. Later on, at the end of the event tonight, we'll be giving away some of the videos that we shot last February to one of our participants here, and we have just a really great event lined up tonight. We've had just a huge number of attendees sign up. David just knocked it out of the park in terms of people signing up for this. We doubled our biggest webinar to date so far in terms of signups, which it's a credit to David. It's a credit to our audience here. I mean, we're at the bottom of a metals and market right now. There's no urgency in this market right now, and I mean, we've had we're approaching 900 signups for tonight's live event, and that's a lot. For a live event to get everybody together all at once. So again, thanks to everybody for doing that. Everybody saw the disclaimer. I don't have to go through that live now anymore. We've got that posted in the lobby when you get here. Carrie, if you could just maybe just give us a little opening here as well, kind of talk about things. And we've had a lot of questions come in advance, and I know a lot of people are submitting questions live right now. If you have any questions, go to your chat box on your Citrix screen here, and you can submit questions, and we'll get to those if we can, so we'll have no shortage of questions for tonight.
Yeah, sure. And yeah, thanks again to David and you, Robert, because look, we're approaching the holidays, and difficult time to get people together, and yet so many of you out there signed up, and it just shows because the events of today aren't waiting for the holidays. They're kind of immune to any human intervention. And look, we're just trying to, Robert and I and all of our guests are just trying to do these webinars just to help you keep up with it, to help us keep up with it, because nobody can fully comprehend what's going on and what to do about it. So, it's all part of that, and we're really looking forward to doing another live event in the not-too-distant future. It'll probably be a hybrid kind of webinar live event, and it's all about getting you the information, helping you make connections, opportunities. Hopefully, we'll figure out a way so that all the people who are watching can somehow connect as well. I don't know how we're going to do that exactly. Robert and I are working on it, but we provide the information, the experts. We're all in it together. Uncertain times require new methods of dealing with what's going on because we're in totally uncharted, untested waters, and nobody knows what to do about it. As watching something, I think we're entering a new age. And resisting the change that all of us are going to have to make isn't an option. Going blindly with the flow isn't a strategy. And we're here with you, just in many ways as clueless as the rest of us, but we're making plans nonetheless. So stay tuned, be prepared, and be advised. That's all we can say. And with that, I think we should get on with it. And again, thanks to all of you, because we are approaching holidays. You're probably with your families and other things, but yet the interest is so high and it's obvious.
That's right. And just before we dive into the questions, they're rolling in here now, and we are recording this for everyone. And David, I've had just a couple of texts here. So on the audio level for your mic, you might want to actually just make sure that's up a little. A couple of people are just having a little. There we go. Yep, get that probably a little closer. That's perfect. And just so we get that up, and we'll amp it up in the rebroadcast. We can do that. Live events are always a little challenging, as we know from the Liberty Mastermind, but we improvise along the way, and post-production is a magical thing. But again, the questions are rolling in now, and so I've captured a lot of them here. We're just going to take these in no particular order. David, what is the industrial outlook for silver in the years ahead?
Well, I'll answer the question. Before I do that, I want to give a little background first. Can you hear me okay?
Yeah.
Am I coming in strong?
Yeah.
Okay. The industrial demand on silver going back roughly a decade was about 35% of the market. And shortly after that, a few years later, it had ramped up to 50% of the market. And that's been steady, which is around, depending which study you look at, be it the GFMS produced by the Silver Institute or CPM Group, either one has roughly ballpark the same amount used in the industry. Again, 500 billion ounces, roughly 500. And that's flatlined for the last several years. There was a recent study that came out by CRU Group. It's available for free on the internet at the silverinstitute.org website. And they're forecasting a 28% increase by 2015. And that is primarily due to photovoltaics, which is your solar panels, LED lighting, which will be a big one. By the way, these will be in-depth discussed in our book, Silver Manifesto, which will be out in January 2015. The book's really finished. I'm starting with the last chapter, and a couple things are just very minor to finish the book. It'll be available on Amazon. And so basically, we've been flatlined at 50% of the silver market. Now it's going to be greater than that. It's going to be about 66 million ounces of new demand in the next 3 years, primarily with photovoltaics batteries. But across the board, you'll see things. I did make a note of it in the latest Morgan report that'll be out on the 1st or 2nd of January. That place where I was inaccurate early on, and that was the RFID tags. The RFID tags will double over the next 3 years. However, doubling from 2 million ounces on an annual basis to 4 million ounces on an annual basis is not significant to the billion ounce silver supply on an annual basis. Where I was wrong was that the initial idea of the RFID tags use on grains per unit was off by a factor of 10, maybe in some cases a factor of 100. So I was using the best data available at the time, and of course it was inaccurate. So I'm not trying to make an excuse. I'm just trying to tell you all how difficult it can be to forecast any market, including the silver market. But nonetheless, the RFID tags, I think, are used in about 1 billion applications as of 2014, but they use such an inconsequential amount of silver, it's not going to be a big driver. So that's something someone's probably read my earlier work or maybe read my first book and think, aha, well, once those RFID tags really get rolling, it's going to take a lot of draw off the silver market from the industrial side, and of course that's not true. So we can move on. I probably drilled on that pretty far, but I think the main point is it's going to go up, and it's been flat. And that's even with quote-unquote recessionary times. As I've said many times, silver is the best technology stock you can own. The silver world today really changed roughly around the year 2000. No one can put an exact date on it, but I want you to think back about 2000 and the tech wreck. Everything that we have that's electronic or electrical uses silver in it. I mean, this little battery pack here that I take on the airplanes, it'll keep my iPhone and iPad charged no matter what. Silver. Of course, our iPhones, our iPads, our laptops, etc. So there was a fundamental shift in demand because of these electronic, personal electronic explosions that took place approximately the year 2000, and it's been going on ever since. I mean, the amount of cell phones back then compared to now, laptops, iPads, etc. And all those use some silver. And so that's the been the main driver to take it from the 350 million ounces on an annual basis to 550 million ounces on an annual basis. And then it flattened out, and again, I'm repeating myself for the third time, it's going to increase again. So silver is very indispensable, and economically, there aren't many substitutes. All the substitutes, not all, but almost all substitutes for silver are more expensive. So economically, it's what's called price inelastic on the demand side. If you have a refrigerator and silver is 1% of the cost of producing that refrigerator, and silver's prices triples, so it becomes 2.3% of the total cost. It's really not going to be a big event for the refrigerator manufacturer that will continue to use it.
The next question that popped up here, David, it seems to be kind of a follow-on to that. I'm trying to group these together. Why is investment demand the driver for silver and not industrial demand?
Well, to be totally intellectually honest, I mean, demand is demand. So silver doesn't sit there and think, I wonder who wants me. Somebody wants to hold me as a precious metal for monetary purposes, or somebody wants to stick me in their refrigerator. Silver can't think. But, and I'm trying to be a bit humorous here, but they are different demands, and it's very important to understand this. The industrial demand is one that's strong and getting stronger, but it's not the driver. The driver on all markets, stocks, commodities, automobiles, any market, anything that's sold is at the margin. What that means is when you are in an auction, as an example, it's the last one that bids that gets the Rembrandt or the fountain pen or the Elvis Presley signature or whatever you're bidding for. The same thing in the silver market. So it's the demand at the margin. People that don't necessarily want it for industry. In fact, it's price inelastic in industry in many cases, as I just outlined. That's one example. But on the investment side, there's an infinite demand. And the reason there's an infinite demand is human nature. And so since silver represents money or a safe harbor, that is the driving force. And it's always been that way, and it will continue to be that way. Now, that's where the margin is made. In other words, when there's huge demand for silver to be held as an investment for whatever reason, be it inflation, deflation, gifting, savings, whatever, doesn't matter. It's being wanted, it's demanded for quote-unquote investment purposes in some part of that realm. And when people tire of it or don't want it and decide to not buy it or sell it back, that again is at the margin. And so that's what really moves the market. Now, I know about the manipulation, and probably get several questions on that and everything else, and that's fine. But the driver of the silver market is at the margin. The margin is the demand. That's simple. And it's actually pretty easy to prove. I don't know if I did a good job explaining it, but that's how the market moves. All markets move that way. It's the last one. The last one that bids the highest price is the one that gets it. So that's what's going to move the price, and has moved the price in the past and will in the future.
Okay. The next question, how do we know the bull market in precious metals, i.e. silver and gold, is still intact?
Well, I guess you could argue fundamentally that we don't know, but since I believe in technical analysis to a certain level, I mean, it's a tool, it's a good tool, and the more basic you take it to, the better it performs. In other words, the basic idea that you could put a rock on a wave that comes in and out. Let's say you're vacationing at the beach or live at the beach, and you know that the tide ebbs and flows, and that's a fact. You also know such a thing as low tide and high tide, and you could actually go out and, not knowing if the tide is coming in or going out, you could do a quick experiment and put a rock every time the waves came in, and the next time a wave came in, put another rock at the apex. And then if you notice that the rocks are getting closer in toward the shore, you know that it was coming in. Or conversely, if the rocks were going out toward the ocean, you know it was ebbing or flowing away. That's the basis of a fundamental fact, which you can make some determinations using technical work. I believe in the basics of technical work. I got very esoteric about it at one time, but I don't do that anymore. The way I trade, use technical analysis, but not to nearly the level that most people think is necessary, because it's not, but that's a different topic. So we have not breached the uptrend line for gold. We have not breached the uptrend line for silver. It's that simple. That's the technical work. Fundamentally, I would go even stronger, and that is that we have history to use as a basis. And in all of recorded history, at least recorded history that we're aware of, there's never been a fiat currency that hasn't failed. So it's an accurate presupposition that it's failed 100% of the time, and to the idea that this time the paper will trump gold, I think is very, very remote, but you couldn't rule it out entirely. Fundamentally, that is the fundamental reason that we have not completed the bull market.
Just a devil's advocate question: what if you're wrong?
Well, if I'm wrong, I guess I'll admit it at some point. It's hard to say, when exactly you're wrong. It'd be hard to measure, but let's say, let's say, okay, I'm wrong. I would still feel that I haven't done a disservice to anyone, and the reason I can say that with authority is that, a lot of the early subscribers certainly are sitting on gains still, but more importantly than that, I've never recommended anybody to go off. I've recommended in the investing rules book, 10% for most people, 20% for the very ardent silver and gold bulls. So since I have used, the prudent man theory, so to speak, for most people, there's always exceptions. I myself am an exception. I'm certainly more than the 20%. But if you do balance your portfolio, then and you have, an insurance policy. A lot of people think of it in those terms. I don't necessarily think of those terms, but most people do. Then basically you can throw away, a life insurance policy or fire insurance on your house. So if you had, let's say, a 10% allocation, and I'm wrong, would you really hurt by it? The answer should be no, you weren't. If you're 100%, you buy it at the top, you get all enthused, you read one article from Ted Butler or myself or whatever, and you decided that you're not going to take responsibility for your own decision because you read one article on the internet or 10 or whatever, then, is it my responsibility to, take responsibility for your decision-making process? And I say, no, it isn't. So if I'm wrong, I'm wrong. I doubt it, but I could be. I certainly will man up, so to speak, and say, could I be wrong? Yeah, I could. It could be the first time in recorded history that paper trumps gold, that you can print to infinity. That Janet Yellen knows what she's doing.
They're trying.
It's all possible, but I doubt it.
They're trying hard.
I haven't asked that one before, so someone wants to get me, I guess. So that's a good question.
Yeah. Go ahead. Gary, any comments on that front?
Well, the odds are certainly in your favor, David.
Thank you.
Yeah, fair enough. The next question says, with all the deflation and deleveraging going on, won't that be negative for silver?
Wow, well, hear me take a deep breath. That's the basis of the speech that I did years ago. I'm thinking when probably 2008 or 9 at the January event at Cambridge House up in Vancouver, British Columbia. By the way, it's probably plugged right now. Excuse the shameless plug, but they've been very good to me and vice versa. It's the Cambridge House. You can look it up, Cambridge House, on Google. And they do basically resource events and have for years. They're one of the best retail shows that I know of, and their January event is their best in my view. So if you want to attend, you can look that up if you're U.S. based or Canadian based or wherever you are. You can attend, obviously. So anyway, I know that Professor Roy S. Jastrom wrote a book called The Golden Constant. And he basically went back and looked at commodity prices through several centuries and determined whether or not gold performed well during a deflation or inflation. And what he determined was gold actually performs best in deflation. Now, to be intellectually honest and fair about the whole process, and a lot of the time that he looked at that, gold was money. A lot of time we're on a bimetallic or a gold-only standard. But gold actually, from his work, did better deflation-wise than inflation. moving on from the golden constant, after Professor Jastrom got done with his book, he thought, well, I wonder how silver does. And he did basically the same analysis on the silver market. He wrote a book called Silver, the Restless Metal. And that was the basis of my speech that I gave. And silver is an odd duck, meaning that it performed well during some deflations, but not so well during other deflations. Basically, the summary is that most of the time it didn't do that well during deflation. Some of the time it did. It does the best during inflation. In fact, during either the forward or the introduction to the book, he talks about, in an inflationary environment, probably without a doubt, and I'm exaggerating slightly, the best place to be would be in the silver market. So silver, now that's Professor Jastrom's work. Okay, now you ask me, what do I think? I think times have changed. Go back to my earlier statement about the year 2000 and how technologically advanced we are and how much silver is dependent on these technologies. And because of that fundamental fact, we have to re-examine the market. So if you go back to Jastrom's work, and I think he wrote that book, 60s or so. Silver still at that time was used, in mirrors and photography, which most of that's recycled, and people still don't understand that. But regardless, it had very little to do outside of the monetary use. Photography was recycled, and there were applications, obviously, but nothing like there are now. We go back 10 years, it used to be 50 million ounces of silver, now it's 550 million ounces. Go back into those days, I don't know what the number is, I'll have to guess one, but 150 million ounces or something. So now we're up like 6-7-fold from what we were back then. And is the electronics industry increasing and decreasing? I don't know, but I suggest from the CRE study that I just outlined at the beginning, they're forecasting an 18% increase in silver demand in the industry in 3 years' time. So you can do with that as you wish. So having said what let's tell you the fallback position is, where there's a demand regardless of, the price, inelastic demand on industry for many applications, and the deflation thing. I would argue, first of all, let me state that Jim Poplava did a great study on inflation versus deflation. And what Jim determined after reading I don't know how many books, that there's never been a real true debt liquidating deflation on a fiat-based system. When there's a gold-based system like in the 30s, even though they took Americans off the gold standard, remember they kept the international markets on the gold standard. It was only America that couldn't settle on gold. So it was a de facto gold standard outside of the U.S. if you want to think of those terms. You had a debt liquidating depression, no doubt. But to repeat that under a fiat system is very unlikely. In fact, Jim, from our discussion and what he told me, didn't see that. So having said that, I think that the industrial demand, and even in a perceived deflation, I think silver would do fairly well. It's tracked gold with an 85% correlation. So it's not like gold's going wildly higher while silver's going down. Certainly silver moves more up and down. I know that. I think we all know that. But pretty much correlates with gold regardless. So if we saw gold taking off to the hills and silver going the opposite direction, and that lasts for month after month after month, then I'd have to scratch my head and say, wow, silver does not do well during whatever the economic conditions are. Last statement we can move on is, really these days we're looking at economic uncertainty more than inflation or deflation. Because you ask a lot of people, and even very steady people, what do we have? And you get strong arguments when we have inflation because look at my food prices, or look at this or that. And I'll have other people say, no, we have deflation. Look at what my housing prices have done. So even though, especially as an Austrian economist, I'm not supposed to say that you can have both at the same time, I can say that we certainly have uncertainty. And during uncertainty, people strive for certainty. And the one thing that's the most certain is what gold does. Remember, gold is God with an L in it. I mean, that's how it's perceived for a lot of gold bugs. And silver is its younger brother or sister or cousin or whatever. But silver certainly holds all the properties that gold has, plus it has all these industrial properties that it's used for. So I really, long-winded statement, think that silver would actually do okay in a true deflation. And any inflation, it will go wild. And I'll back that up because when we had QE2 announced, silver took off from 26 and went to 48. And that was under the assumption that all that paper printing would manifest into inflation in the marketplace, house, in the average American. And it did. The printing did take place, but the manifestation of it into the real economy did not take place. And that's why we got that huge run up, because it was anticipating what that printing, that QE2 would do, destroy the dollar, and that's not what happened. It certainly took place, but it didn't really manifest into the everyday person's life, and so the market backed off. So again, a long-winded statement, but it's a good question because it's one I definitely struggle with, because I don't want to mislead anybody, and I'm pretty much tied to the silver market myself, so I want to have a pretty good idea under all conditions. How do I expect silver to perform?
Well, the next question, you mentioned deflation a couple of times here, and this next question also ties into that. It says, the past 2 years have been difficult for those of us who recently got into silver. He says, some economists, Harry Dent, for example, still predict a continued fall. Would you agree with that?
I don't know if I agree. I don't necessarily disagree, which is not a good answer for the person asking the question. I mean, I listened to Harry's, one of his interviews. I read a couple of his books. I've never met him personally, just for the record. I know his demographics work. I actually wrote one of the Morgan reports based on a different study on demographics. There's a lot to the demographic argument. But, I think he said gold was going to go to 700 on the interview that I saw. I think it was with USA Watchdog, Greg Hunter. Regardless, as Jim Dine says, the cure for low prices is low prices. It's hard for me to see silver going much lower, knowing that the average good operating, well-managed silver miner costs roughly $22 an ounce to produce it, and we're sitting around 16. So that's 25% of the market. And so low prices means that you can't produce at those levels for forever. And so they'll cut back, they'll stop, they'll go out of business and do something. Something will happen. And that means that the supply-demand curve will change because there's going to be less supply in the case of them going out of business, as an example. So, markets overshoot. Markets go from undervalued to fair value to overvalued. It happens again and again and again. I mean, there's no such thing as a perfect market theory, or forget the exact name. That's foolishness. The reason we can invest is because the market misprices things. If the market didn't misprice things, there'd be no point to investing at all. So, silver is mispriced in my view. Could it go lower from here? Yes. Is it going to go lower from here? I've already put my neck out a couple of times and missed it. I thought that the 1817 intraday low was it, and I was correct for 14 months. But being right for 14 months, you only need one day to be wrong. And there was a day that went under that price. So I was wrong, and I admit that. I think the spike low that we saw recently in the 14 level in the access market is probably it. But I'm going to use the word probably, and I'll put a probability on it. I'll give it like an 85% that's below. Could it go lower? Sure, it could. Am I worried about it going much lower? No, I'm not. Again, we're under the cost of production for a primary silver producer, and even the base metal miners who don't really give a darn what the price of silver is, certainly seeing their demand curve change because the amount of copper, lead, zinc that's being demanded currently is not as robust as it was a few years ago.
Well, leading into that, the last couple of questions, you mentioned the conferences, the Cambridge, I think it was the Cambridge conference. And just while we were chatting before the webinar started, you were telling Carrie and I that you're actually doing an event in Spokane later this month with Daryl Robert Schoon, who also spoke at the Liberty Mastermind. Could you just take a quick minute and just tell us kind of what's going on and what that's about?
Sure. It's a URL, so you can copy this down, whoever's listening. It's www.drschoon.com/events. backslash, and I'll spell that. It's drschon.com/events/. And what you'll get is a landing page. It's called the Checkerboard Game, and this is something that is a little, somewhat of a stretch for me. It's going to be myself, Marshall Thurber, and as you said, Darrell Robert Schoon. The basis of it is, how did money, economics, and power create the present crisis? So that's the question that we're asking. And then the Checkerboard Game is a unique experiential learning exercise that offers participants an intimate view of the transformation that is happening in the economy on a global basis. It was created by Marshall Thurber, and it is a profound experience. It was first played in the Positive Deviant Network in 2009, and it's being offered for the first time to the public. And this is hearsay, but I believe the source that Tony Robbins of Personal Development fame actually wanted to get the rights to this game, and Marshall, who invented it, or was one of the inventors, would not sell it at any price. The 7 characteristics of the positive deviant is passion, a high moral or social purpose, seeing holes versus the net, moving towards something, not away, rapid cognition, checking the edges, and a low regard for social convention. So if you show a bell curve, we're probably at like 0.1% of the population. But when you consider the precious metals investors are about 1% of the population, then a tenth of them would probably fall into this category. And that's just an idea. It's no perfect mathematical formula. It'll be held here in Spokane. If you go to that URL I outlined, drschon.com/events/, you'll find out about it. It's on the 24th of January, and it should be quite an interesting day, and we're looking very forward to offering it to everyone. Again, it's a little more than just gold and silver conference. It's really going kind of to the root of the problem, and then at the same time, because most people understand the problem, but not all, but this audience for the most part. It's more about how they can relate themselves to the problem, understand it at a deeper level, and be ready for it, not only mentally. The problem, I think, that's going to take place is not knowing that something is ahead of us that's probably never been experienced by humanity, that we've had these unbelievable 100 years with this, rapid increases in standard of living that take place. And any disruption of that is going to be the, oh my, I can't handle it factor. My BlackBerry doesn't work, or, whatever. And it's how to prepare for that. And the best preparation for that is actually going to be intellectual. And it might be more of a heartfelt way. So you really have to integrate yourself. And we'll be exploring that during that day. So enough said, probably oversold it as usual. But again, I'm very passionate about it. I'm very much looking forward to it. Again, it's a little different. More along the lines of what you guys do, Robert and Carrie, with your Liberty Mastermind. I mean, you know how different my presentations were at your events versus what you would see normally with me at, let's say, a resource conference.
Well, exactly, and that was the neat thing, because when David spoke, I mean, we didn't put any parameters on what people could speak about, just the 20-minute time limit. And I mean, typically you go to like a Cambridge conference or Silver Summit or any of these, more traditional resource conferences, and the slots are, the formats are predictable, and the topics are mainstream, at least for this sector. It's the information people are used to receiving. Carrie and I took a very unconventional approach, because there were a lot of topics and different aspects to this market that our group of presenters could speak to, and they came back with some pretty amazing and diverse presentations. Some spent a month or so or more putting their presentations together, and it really showed. I mean, it's quite a bit of energy, and in the next 48 hours, when we get David's speech posted to our website, which if you go there, you'll see it's up for maintenance right now. You'll get to see just something very unique that the people that were there just have been buzzing about ever since, basically. The next question that popped up here, David, Why does the why does the silver ETF trade lower than the spot price of silver?
Well, read the prospectus. I mean, I don't want to give an off-the-cuff answer, but it's because you really are not investing. All that money isn't invested in silver. I mean, that thing does have physical silver backing it, but it's basically a paper proxy backed by silver, and they take silver out of the fund to pay management fees. There's fees that go to people that manage, store, etc. So there's less silver per share than you would think there would be. I don't know if that makes sense, but it should trade at a discount. It can trade at a premium, however. If the silver market gets hot and people want to buy it, it's like I said about moving up the margin. But normally, you're paying what you buy per share is not returnable in the full amount of silver basis the share price, because there's fees that are taken constantly on a quarterly, annual basis type of thing. So you're always having less and less of the pie, because the pie shrinks because of maintenance costs, and they go into various directions. Read the prospectus, and we'll probably do a much better job of explaining it than I can.
It's not that easy to read that prospectus, David. You know, it's you got to try to figure out where they're really holding that silver, and subcontractors, you know, holding it. And if you could figure out where that silver is being held, we'll give you a free silver round here from the Financial Survival Network. Anybody who can show me on a map where that silver is being held gets a free silver round. How's that?
Well, and aren't basically the silver ETFs? I mean, much like the gold ETFs. I mean, they basically track the price of the metal. You know,
yeah.
They're not convertible unless you're taking out.
It says nothing about silver bullion. If you read it carefully, like a lawyer would read it, it talks about silver, silver, silver. It never says silver bullion, or it doesn't equate to the physical silver market. It equates to the silver price.
Right. So it's basically a paper instrument.
It really is.
Yeah.
I mean, you can argue how much real physical silver is behind it, but then you have to question the ownership. Is it swapped? Is it leased? Is it loaned? And all that stuff. It is in many, many cases. I mean, are there some single bars that are allocated to it and it owner? Sure, there probably are. But it's probably one half of one bar. I mean, the rest of it's, you know, swapped, loaned, leased, pledged for collateral, used in some kind of debt instrument. You know, I mean, it just goes on and on, because these quants, as they're called, these math majors that are able to come into the financial world, use a lot of probability theory that's so esoteric that it gets off into the realm of unbelievability. They've never lived a real life in a real way and understand the way the real world works. And these things are not supposed to blow up. That was the excuse given by long-term capital management. And some very powerful math people in that realm, but nonetheless it failed. In fact, it almost found the system at the time. If you want to see that, look at the movie $1 Trillion Bet. I used to use that as one of the precursors to one of my speeches. But regardless, we'll move on.
Yeah, no worries.
Hey, also, you're allowed to short SLV, and
Right.
What is the purpose of shorting that stock? So, anyways, just a point.
The next question: if and when the public wakes up about the coming economic collapse, will they be able to purchase physical silver?
Well, I've probably thought about that question as much as anyone, and the answer is I don't know. I believe that there's a very strong possibility that you will not, and that's why I'm still so bullish on the mining shares. Because people, and excuse me if I'm offending anyone, and when I'm saying people, I include myself, are lazy. You know, there's days I certainly have acted lazy. And it's a lot easier to go on your Ameritrade account and click a mouse and buy a gold stock than it is to find the nearest gold dealer and go to your bank and go to the teller window and pull out some cash and then walk in and put it on the counter and say, you know, I want so many gold coins or so many silver ounces or rounds or whatever. It's much, much simpler to sit on your behind, look up your E-Trade account or whatever it is and find a gold stock. So my belief is if it gets difficult or impossible to buy silver in size. That's not to say you can't buy some rounds or some bars at the retail level, but Eric Sprott or Stefan Spicer or one of the big hedge funds want to buy physical, in the 20, 30, 40 million ounce realm. And they say, are you kidding? Come back. There's no way. When that happens, or if that happens, then people will automatically default. And that's where the panic buying will take place. So I'm very bullish still on mining shares. I think that will take place, that people that can't get it or don't want to do it. In other words, they're lazy. They want it. Gold's taken off. Well, I don't want to. Look at this gold stock for 25 cents here. Why would I spend $2,500 for an ounce of gold? Look, I could buy 100,000 shares of this stock for that price. I'm going to get rich. And boy, I've lived through that. And that's why I've been so diligent in Morgan reports to try to prevent people from getting, too greedy or unfocused on the way markets really work and where to allocate. And we allocate, my best effort correctly. Big money in big companies, medium money in medium companies, and little money in small companies. And I'm not afraid to add to a position if it shows merit. And I've said this sounds like brag, but the fact is the fact. I think we have picked more exploration type small junior companies that have become actual mines than anybody else in the business. And that's a pretty tough task. But anyway, it doesn't even get them right all the time. I want to be clear if there's a lot of listeners there. Well, David, what about Colossus Minerals, or what about, I've made some errors, but I have always made a determination that you allocate correctly. In other words, you bet a little to win a lot. If you do that as we teach, then you really can't, complain, because if you follow the outlines of what we do and you do it as we suggest, you certainly are going to do a lot better than willy-nilly, oh, that David likes that one the best. Well, there is no system favor to it. So anyway, I still, I think it is important to think about that. Am I right or wrong? We don't know. Market knows. We'll find out.
I'm going to throw in my own question here before I go into the next one, because I've asked this of some of our other guests on the webinars, David. When the price of physical metal is as low as it is, and tuning into these webinars and these different programs like what we're doing here, we have a very sophisticated, focused intellectual audience that's very astute and tuned into what's going on in the economy. There seems to be there's no urgency right now when metals prices for physical metals are this low, and when you've got $16 silver, why there doesn't seem to be more of a clamor amongst those at least focused on this sector to be buying it up with both hands. It seems a lot of the people I talk to, they'll probably start buying again when it's rising again, when it's at 18 or 20 or $22 silver. They'll say, the train is moving again, I better get me some of that. And then they'll jump back on the bandwagon, and there's been physical metal here sitting around at $16, $17 that they haven't bothered to touch. Why is that?
It's human nature. I mean, I've looked at markets my whole life, really. I mean, I was 16 years old when I started in the stock market. I was so fascinated with money and finance. And, having started the Silver Investor, or silver-investor.com, in 97 or so in California, renaming it and getting that URL, and I think 99. Sat there and I gave out some really good free information about how low the price was. On an inflation-adjusted basis, silver had never been lower. In real terms, it was lower than 22 cents during the Depression, if you adjust for inflation. And no one was buying it. And what's so fascinating about that was I was buying it, Warren Buffett was buying it, George Soros was buying it, Bill Gates was buying it. So the billionaires, not the millionaires, the billionaires are buying at the bottom, and I was buying at the bottom, and I couldn't seem to get anyone to buy at the bottom. People are herd animals for the most part. They're, a leader is a leader because there's a few of them. And most people would rather follow or not take responsibility. I mean, that's why there is a specialist for everything these days. Think about it. If you want to get in shape, you get a personal trainer. If you get in legal trouble, you find a lawyer. If you are wealthy enough, then you don't want to cook, you get a chef. If you have some money, you get a financial planner. I mean, very few people take responsibility for themselves. They want someone to blame or someone they think could do it better than themselves rather than learning what they need to learn. Or they will just basically follow what is the trendy thing at the time. Silver became very trendy once it reached, I don't know what level, but once it got above the $26 level, I'll say, based on my work. It became very fashionable by silver. And I said at the time, you'll see more silver will be bought above 30 than was ever bought below 30. And I think that's probably true, even to today. So it's just human nature. People don't buy bottoms. That may be on my epitaph, when I leave this realm. That David said, people love cheap stocks, quote number one, and quote number two, people don't buy bottoms. That's the best I can do for you. I hope it resonates because it's true. They just won't. When it starts to move up, once we get probably above the $26 level again, and it starts making the mainstream news, people that might have been sold under that price will buy it back higher, or people that are not in the market will, be happy to buy it at, 25, 30, 31, whatever, but they don't want anything to do with the current price. It fascinates me because, especially in commodities, you want to buy low and sell high. In the stock market, it's a little different story. I don't have time to go into it, and I can make a pretty strong argument why you don't necessarily have to do that in stocks. But commodities, oh yeah, you
do. Okay. David, I'm going to have you hold that up just a little higher if you could. Yep, perfect. Yep, and I'm going to have to do the same here. All right. And the next question here, this actually goes back to you were talking about the cost of production. Do you think some silver mining companies will actually shut down because they aren't making a profit?
Yeah, I answered that in the Morgan report, and it's a rather lengthy answer. It's a case-by-case basis. I mean, there's been many that have been shut down, so to speak, or more as a metaphor that we're out there exploring or might have had a good asset that will never come to fruition at these prices, or just basically, gone out of business. But those are your small little companies that can't get financing or that type of thing, even some with some pretty good assets. And there's others that are in the realm of production that won't go into further production even though they have assets that were worthwhile because one of the tax situation or two because of the current price or a combination thereof. So to think that it hasn't affected the mining market is not true. It has. As far as what will it do to some of the better known names in the industry, at this point I don't know. What I do know is if it goes on long enough, yes, it will. It absolutely will. I just don't know when. See, mining is a very unique industry in a way because it's actually more economic to mine at a loss than it is to close down instantly. Close down instantly, in most mines, they go bad really, really quickly. And a lot of the contracts are written for the townspeople or the people that are actually doing the mining, so that they get a big bonus, like they get a 6 months pay or whatever. I'm just making this up, but I want to be clear on the example. So it's smarter to just mine quarter after quarter at a loss, at a loss, at a loss, rather than shut down, because to shut down and restart is so astronomically expensive that you're smarter from a cost standpoint to keep going. But that doesn't go forever. I mean, you don't want to mine at a loss for 25 years or something ridiculous like that. There is a break even or break off point. So it's really hard to determine when somebody might go out of business. It's like a lot of businesses, not just mining. I mean, the person that owns a clothing store, for example, that had a bad quarter was always thinking, well, next quarter will be better, and they have another bad quarter. And they think, well, next quarter is going to be better. We're going to get a better buyer. We're going to get more up-to-date clothes, and we're going to do better. The next quarter is a loss. So, people are basically optimistic, and sometimes overly so. They think, well, we just hold on a little longer. Now, if you put a big, I'm not going to go on from there. It's really, I put a lot of thought into that answer in the Morgan report. It's available here, coming out on the 1st or 2nd, I believe, because the gentleman that asked it had kind of a 3-part question, and I went through it pretty in depth, and I'm asking both the analysts, because 2 or 3 heads are better than one, to look at my response and make sure I didn't miss anything. So that's the general idea.
No, very good. The next question, David. I've heard that some mining CEOs are planning a cartel to begin withholding silver off the market until prices adjust to a production cost or above. Do you or Kerry have any insights on this?
Well, Keith Newmeyer from First Majestic, and I know Keith very much on a first-name basis. I've known him for years now. Did withhold, I think it was 1 million ounces, and prices have gone down since. 1 million ounces in the silver market, that's a billion-ounce market, isn't going to make a big difference. I mean, I admire him. And, you know, forming a cartel, you're a little careful with that word. I mean, I'm not trying to play a semantics game here. One thing I know from my own experience is that it's okay to manipulate the silver market on the way down. In other words, you can create all the fictional silver in the universe that doesn't exist and sell it. But once you start doing anything on the long side with the physical market that might have an effect on price, you want to be a little careful. Nonetheless, I'll just go on a little bit. Gold Corp, one of the premier gold companies when Robert McEwen was running the company, held off some gold production and banked it for a long time. And that was a very, very, I think, intelligent thing to do. And I think it gave a lot of investors that were gold bugs or gold specific great investment opportunity. They had a mining company and gold bullion with, you know, a share purchase. I urge a lot of silver miners to take a similar approach in the silver market. Silver Standard did it for a little while. Endeavor Silver has done it. Held off some production. So First Majestic is the first to do it. But there's never been a concerted effort in my knowledge of where 3 or 4 or 5, you know, silver producers got together and said, you know, we've had enough of this nonsense. We're going to mine. Well, and the other thing is, well, there's so many things. Again, I go into this in that answer, the previous answer in the Morgan report about how the quote-unquote money in quotation marks, the fiat system controls so much of the mining industry, why, how, and that sort of thing. So it's a pretty complex answer, but hopefully I gave at least a taste of it.
No, very good.
Basically, I don't think it's going to work. I don't think it's going to work too well to withhold production. They can't afford to. These aren't big companies. Yeah. It's not Exxon Mobil that's a $100+ billion a year company, and they get together with all the other $100 billion a year companies, and they just withhold 10% of their production. These companies are to the point where they're counting paper clips. Just not practical in the mining sector to do that, and they don't really. They're friendly, but they're not in lockstep like the oil industry. Let's face it.
Okay, the next question, David. If the government will only allow precious metals for IRAs to be stored in a federally recognized depository, why isn't there one in every state?
Don't have an answer. It's a great question, though. I like it. And by the way, there is a way to store it yourself. It's rather complicated. Not really. It's complicated paperwork-wise. I don't really know all of the details, but I know who does. And if you're interested in a self-directed IRA, Holy Precious Metals, that you could go look at, send an email to support@silver-investor.com. In the subject line, talk about precious metals IRA so we know what you're talking about. And I can direct you to somebody that has worked with me for a fairly significant amount of time that does that paperwork. It costs you, I think it's a $2,000 bill to get it set up, but if you're talking, you know, substantial savings and want that IRA to be partially put with metals or maybe even the whole thing, I think it's probably worth it, especially if there are economic problems where you might not want it held by an entity that all of a sudden gets a phone call saying don't release any metal or whatever. I'm not saying that's going to happen. I'm not trying to scare anybody. I like this other approach. That's what I'm saying. If you want to know more about it, send me an email. We'll help you out.
The next question, David. This gentleman says, I recently watched an interview where you indicated one of the places to store your gold and silver is in a bank safety deposit box. What is to prevent the theft of your goods in that location?
I don't recall saying that. I mean, maybe I did, or I misheard it, or got me confused with somebody. I get confused with other market commentators from time to time. In fact, I was going to recommend safe deposit box for a small amount in a letter like 9 years ago or so. And then Washington State basically put out a little memo to the banking system saying that they could go in and do what they did in the 30s, basically seal the safe deposit box. I've never really recommended that. What I might have not conveyed accurately is there are private safe deposit boxes at private storage facilities that those I don't really have a problem with. There was one in Las Vegas that I used to recommend and had some stored there myself. There are these private vaulting facilities around. There used to be very much more common in the 70s in the last bull market than there is today, but there are some. So there are, it's exactly the same safe deposit box you'd be looking at in a bank, only they're not in a bank, they're in a private facility. So that I have a problem. As far as a safe deposit box, meaning it is housed in a bank that's a member of the FDIC, that wouldn't be something, put your will in there, put your passport in there, put your papers in there, that's fine. I wouldn't put it in there. No.
Yeah, just a couple things on that. In Florida, on the East Coast, we've got a couple of them in the Fort Lauderdale area. And David published a little paper I wrote a couple of years back on, I could say it here on the webinar, using casino safe deposit boxes to store your precious metals. A couple things you need to know about it. So you can send me an email about it, khl@kerrylutz.com. They're basically free. You have access 24/7. I know some of you out there have done it. Couple things you need to know about it, but you're basically off the grid. At least in theory, as much as you can be off the grid. And hey, there's nothing safer. I mean, armed guards guarding those boxes, and cages, cashiers, and casinos have been robbed, but they've never gone after the safe deposit boxes, only the cash. So, and you get it for free.
All right, this next one's for
Thanks,
both.
Terry. I've forgotten about that, and that was a great article. I remember publishing it. Go ahead.
No, this next one's for both of you. It's on the kind of the gold-silver ratio. This one says, being that silver is 1/75th of what gold is presently, quote, going for, and being that the dollar is worth nothing now, how do we know what the true value of gold and silver is? So I'll let...
you measure it in value.
Mm-hmm.
He's answered his own question. You take an ounce of gold and you say, what can I buy with this out in the marketplace relative to its historic value? And the price of gold, or the value of gold, the value changes. I mean, the golden constant, what Gaston proved was over a long period of time, it remains, that the value purchases roughly the same amount of goods and services. That's over a long period of time. It doesn't mean it every single day. It does fluctuate. We all know it fluctuates. So what you determine is, what does an ounce of gold buy? And it's like dollars in your pocket. Fiat. Are you going to pay, $455 for this coffee cup? It says John Galt on it, right? Someone might, because I signed the bottom of it or something. But it's not worth 400. So you just have to determine it. And I'm not trying to escape the answer. In fact, that's what I'm going to look at for the top of the market. Mike Maloney does a good job of talking about, with 1 ounce of gold buys the Dow Jones Industrial Average, you might be going to sell your gold. Or 1 ounce of gold buys a luxury automobile, you might be thinking about selling your gold. Right now, 1 ounce of gold, is it overvalued or not? Really, you have to determine that. Someone like me that bought it when it was, 300. I've been buying it under 300. And I bought it on the way up. I've been actually better on my gold purchases than my silver. I don't think I've paid anything more than maybe 600 on gold. Silver, I did buy some at 30. I didn't buy any at 48, but I bought some. Not a lot, but I bought some at 30. But anyway, that's it. You got to measure it for you. It's just like making any other purchase. Just don't think in terms of dollars, or you can, but think more in terms of gold. Would I trade an ounce of gold for X? And if the answer is yes, then spend it or make the trade. If it's not, but when it gets overvalued, and it will, and that's when you've got to ask yourself, where do I spend it, or how do I allocate it, or what do I do with it? Because that opportunity may be a small window, it may be a large one. We don't know yet. Last time was a very small window where you could cash out and take that ounce of gold and buy the Dow, which would have been a pretty good trade. Michael Oneden goes through that on the wealth cycles and how you do that. But you don't want to be married to these metals, as much as I may sound as if I am. I'm really not. I am looking for it as a way to preserve wealth, but it doesn't mean to infinity. It means, hopefully in my lifetime I'll be able to cash out, for something else more productive than a metal that's sitting there. Gold especially, silver has a lot of productive uses. Gold's really just a monitor.
Exactly. I have a banker friend I've referred to on some of my Gold Seek commentaries over the years, and he has a significant portion of his life savings in physical metal, and acquired it 30, 40 years ago, a lot of it. And, when you look at, buying $4 or $5 silver, and even when you look at it now at, $16, I mean, that's 4 times, basically what he paid for it, or 3.5, 4 times. How long would you have to have money sitting in the bank to increase 4x? I mean, how many years, how many lifetimes would you have to have money just sitting in a safe investment to go up that much? I mean, it's a long, long time, actually. And, his view has always been, you have the physical metal, and, you get to a point, and then you cash in a little bit, and, if you want a new car, you buy the car. If you want to go on a trip to London, you use that. In fact, that's how, he joined me at the GATA conference 3 years ago over there. Sold a little gold and silver.
If you used, excuse me for interrupting, but using the rule of 72, which is one of the first things you learn in finance, or even if you're not in finance, at 3%, it would take 24 years to double your money. So to get 4 times that money, it takes 48 years. So if you put your money in the bank, and 50 years later, roughly, you would have 4 times your money.
That's a long
Whereas,
time.
in the silver market, it went from 4 to 50, and it's certainly not. Well, it's down to 16, let's say. So it would have been 12 years. So half the time of a 3% investment. I use 3% because that's basically being generous on a long bond. The most perceived to be conservative investment you can make. Certainly, it's not.
And then there's the counterparty risk point as well.
Right.
No counterparty risk in
the
physical metal.
I just want to go off on a tangent here. It really bothers me, and always has, for a long time, since I studied money for so long, that bonds are considered to be risk-free, yet all paper currencies blow up, and yet gold that's been around for 4,000 years and never blows up is considered a risky investment. It's like, wait a minute, here's the money that has gone on for thousands and thousands of years, and that's risky. But this one here called a 30-year bond with somebody's picture on it, government printed, is safe. Well, but they weren't always safe. They've always gone kaputski, because the problem with compound interest is it's something that can't be sustained indefinitely. There was a great article, I think it was Gary North, I cannot find it, I wish I would have printed it and saved it, talking about what happens over the long run with compound interest. And the idea was simple. It can't be sustained indefinitely. But yeah, that's why like Warren Buffett's and some of these other gurus call it the 8th wonder of the world. Well, it is if you're on the right side of the equation and you're in the right time frame. But eventually it can't be sustained. Of course, that's what we are now.
Well, somebody, you talk about compound interest. Somebody was once trying to sell me an interest in a lawsuit going back to the 1800s from this Indian tribe, and they were promised all these beads and fabrics and stuff, and of course the white man gypped them as usual, and now they were suing to get the monetary worth plus interest. And when you went back to the 1820s, when you added in the interest, basically you could just hand the keys to the country over to them because they were entitled to everything. That's what compound interest does. And then, you know, like you said, David, you look at the unsustainability of it over a period of time when the whole economy is working on it and nobody's producing anything. And it's just a wonder the whole thing's kept going as long as it has. So.
Right.
Well, and you brought up
I think we're going to take one more question. I've got dinner waiting. I said I'd do an hour. It's been an hour and 15 minutes.
Yeah, no worries.
You got a real juicy one there, Robert.
Well, they're all juicy, and it's hard to always pick. So I'll tell you what, you know, everybody always wants to know where the prices are going to go. So I guess I'll just jump to one here. I'm just going to read this one. What time frame would you predict for a rebound? And do you recommend trading silver or to hold for the long haul, i.e. until prices approach $100 an ounce?
Okay, well, I think this year will be a transition year. I think we're going to get above the two watermarks that are very important. And that'd be $26 on silver and $15.50 on gold. I think that will happen in 2015. I'm looking for a huge markup in 2016, perhaps 2017. I think for most people, it's best to buy and hold. Most people can't time the market or don't have a trader's mentality. I can do both, but I've been doing it for a very long time. So really you have to look inward and ask yourself, you know, what are you best at? Can you handle the pressure? What happens if you're wrong? Can you take loss and admit it quickly, very quickly, and quicker than that? It took me a long time to get good, and I made a lot of losses in order to get to the level I'm at. Not that I don't make losses. I do. I just take them and move on. And a lot of people can't. All they can think about is the loss you just made. Me, it's like a quarterback. Oh, I just got sacked. The best quarterbacks get up and looks like it never happened. Because in reality, that is the past, and I'm standing here now and looking at the ball, and I got a play to make, and that's how I approach it. But a lot of people cannot do that. It didn't take me an overnight thing to be able to do that. So, again, I think most are better off to buy and hold. But if you want to trade, that's your prerogative. I'm not going to tell anybody don't. Most traders lose money, so be advised. And maybe I'll just go ahead and close out. You probably ask about the report or close out. And go ahead, Robert, you probably want to ask me, and I can close out with how to get a hold of us.
Yeah, no, I'd like you just to do a recap, but we're going to do a follow-up email to everybody here in a few days, and we're going to send. I know probably everyone didn't get a chance to write down the link for the event you have coming up here the third week of January. We'll send that out to everybody that registered and actually joined us on the live webinar for tonight. So we'll get that sent out to everyone. And that's on your website as well, isn't it, David?
It will be.
Yep.
There's a little misprint on the, but it is www.drshun/events/. It's www.drschon/events/. The morning report is, our bread and butter. There's 3 levels of service, of basic and intermediate and advanced level. It's on the website. Do a lot of these type of things for free. Maybe sometimes I think too much, but I have a YouTube channel called Silver Guru. I have a Twitter feed at SilverGuru22. We also have a free weekly e-letter that goes to anyone that comes to our website. If you come for the first time, to silver-investor.com or themorganreport.com, both URLs take you to the same place. You'll get a pop-up menu, and you just fill it in with a first name and a valid email address, and you'll get our weekly update. And the weekly update usually answers a question from a reader and provides interviews like this. So you don't have to hunt anywhere or whatever. We actually mail it to you. And David was interviewed by Robert Ian and Kerry Letts on this date. Here's the link. Click it, and you get instant access. Usually there's 3 or 4 of those on a weekly basis. I get interviewed quite a bit. So, and there's, again, questions from readers. So a lot of stuff we give out for free. And obviously there's part of the service that, our best thinking is for our subscribers, our members. But nonetheless, like the safe deposit box question. That might have been misconstrued or misconveyed, but that was a question I answered years ago in the Morgan Report. And of course, when you have it in black and white, you print it out on your printer and read it, and it's pretty clear what I really said. So.
Excellent.
That's it.
Kerry, any closing comments?
Yeah, just thank you to everybody for coming, and Happy New Year, and just stay tuned for the next Liberty Mastermind webinar and event. They'll be here before you know it, and hope everybody found this as valuable as I did, because it's changing fast out there. And hey, one thing we didn't touch upon is medical uses of silver, and that market is going up and up as well. Not major right now, but potentially water, wound healing, sports clothing, things like that potentially in the future could also add to it. But hey, David, thanks for coming on and enlightening us, and it's always a pleasure.
And real quick, just before we close, the last question that I didn't get to is always going to be the person that gets a copy of our videos for free. And that last name on here, let me just read it here, is Bruce Pearson. Bruce, you're the last name that I've clicked on here. So, Bruce, if you want to email me, robert@conquerchange.com, I'll go ahead and get you the videos from the Liberty Mastermind. So, Bruce Pearson, Pearson. Congratulations, Bruce. David, it's always a pleasure. I always learn so much every time we have an exchange like this. It's always an honor to have you. We look forward to having you back again on another webinar here. And then, of course, when we schedule the next Liberty Mastermind, we've got a slot already reserved for you. So we hope that's going to match up with your calendar when we're ready to do that. So we can't thank you enough for your support and the honor of your friendship. Thank you so much.
Thank you.
Be well.
Thanks, everyone. This concludes our webinar, and we'll have it posted here within 48 hours, and we'll be announcing our next one here very, very shortly. Thanks so much, and we look forward to having a great year with all of you. Thanks, everybody. We'll be shutting down the webinar here momentarily. Have a great night.